Welcome everyone in the third class of Elements of Company Law, CSEET Restructured Course. Okay, so we had started 2 lectures we had already completed from the Elements of Company Law, and today we are going to complete there are 2 sections in this chapter. So probably today I will complete the first portion. Okay, yes. Yes, the CSEET live student join soon. If you wanted to take the benefit of these classes, this is CS Aarti Panigrahi, your mentor for business law and management, directly live from the heritage city, Mysuru, with the lovely weather. Yes? What is the temperature outside, guys? Yes? What is the temperature outside? 20, 22. 2022. So we are enjoying the weather of 2022. Yes, 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 yes. So in this summer, in this humidity, we are enjoying, we are lucky that we are having a very cool weather. So with that cool mind, let's start the next topic of our Elements of Company Law is what? Lifting or piercing the corporate veil. But before that, we have to understand what is the meaning of corporate veil. So what is the meaning of veil, guys? Veil. Veil is what? Huh? What? Dupatta. Okay. So that is a shield. If we will talk about the veil is to covering something. So it is a shield for the people who are working in a company, who are managing the company. So corporate veil, by taking the benefit of the which feature separate legal entity, the people who are managing the company, so they are having a benefit of corporate veil. There they can say if anything comes on the company, if anything will be there that company had done wrong, so by taking the benefit of the separate legal entity, they can say, no, we are not, we are separate and company is separate. That is called the corporate veil. Okay. But in some cases, after Salomon case, that is the landmark case where like creditors felt, unsecured creditors felt that like by taking the benefit of separate legal entity, the creditors defeated, their benefits defeated. So after that case, actually court had interfered in the corporate matters. So court will interfere in the matters where they will see whether it is company or whether the people who are managing the company, they are liable for these things. Are you getting? So guys, so whether court will interfere in all cases, court is that vella, court is having that much of time that in each and every small cases, court will interfere in the corporate matter. Why this small thing happened, why this thing had happened? No, there are some cases, what we are going to study further, there are some cases where court will interfere and court will lift or pierce. Court will lift or pierce this shield and court will look that who are behind this shield, who are working for the company and they are doing the misappropriation, they are doing the financial fraud or any kind of fraud. Okay, so not in all cases, in some cases court will interfere. Okay, yes, so these things we are going to see today. So lifting or piercing the corporate veil, did you get the meaning of corporate veil? The shield for the people who are managing, they are taking a shield that if they are doing anything wrong, they can say that company is separate and we are separate. That is called the corporate veil. Now court will interfere and lift and or pierce the corporate veil. Okay, yes. So a company is recognized by law as a separate legal entity distinct from its members. Already we know this. Okay. However, in reality, a company acts only through the natural person who control. This word is very, very important, guys. Control is very, very important. And manage its affair. Okay. Through the natural person who controls and manage its affair. So these people are taking the shelter of this shield. Okay. Now the principle of separate legal entity is the foundation, is the okay. So the principle of separate legal entity is the foundation of company law. The student who are joining through online, if you are understanding, just write there USD. What is USD? Understood, understood, understood. Okay, so you have to write USD there if you are understanding the concept. Okay, and USD, how much is the USD? Yes, the price, are you aware? 94 rupees. Yes, so in future also go and earn in USD. So please write USD there if you are okay with the concept. Okay, and if you have any doubt, you please ask. Okay, hi Ashwini. Hello, Shashi. Yes. So, the principle of separate legal entity is the foundation of company law, but this corporate personality is the legal privilege. Please underline, and must be used by only for the lawful and genuine business purposes. Are you getting by this paragraph that separate legal entity? Still we are continuing this feature is very important. Separate legal entity, it is for what, guys? Why this benefit is given to the members, that you are separate and company separate? For which kind of reasons? For the genuine purposes, not for the fraud. Okay, for the genuine and lawful purposes. Okay now, so then where the corporate form is misused for fraud, dishonest conduct, tax evasion or improper purposes, then this shield will be lifted or pierced by the court. Okay, yes, in these cases it is not allowed. So the court may ignore the separate legal entity of the company. So when these cases, these causes will be there: fraud, dishonest conduct, tax evasion or improper purposes. In that case, court will ignore that you members are separate and company is separate. Are you getting this? Ignore. The court will ignore the separate legal entity of the company. Are you getting this concept, beta? Are you getting this? Court will ignore the separate legal entity of the company, and this is known as the lifting or piercing the corporate veil. Okay, USD? Yes, USD? Yes. So under this principle, courts look beyond the company separate identity and hold the real person controlling the company personally liable. Who are this person who are having the control on the company? Which kind of person they are? Natural person. They are the natural person. So control word is important. Are you getting? Control word is important. Which kind of person are natural person are controlling the company? So the court will look beyond the company's separate identity. Thus, the protection of corporate personality cannot be used as a shield for the which kind of act? Wrongful act. Okay, yes. What about the case of he had taken the benefit of that. What, Sasha? Yes. Huh. After his case only. We had seen the Salaman course case. There you had not seen the judgment. Had you seen the judgment? So court had decided, court had established this feature that Salaman is separate and company is separate. And after that only this need arises to lift the corporate veil. After that landmark case only. Are you getting? Yes. So after that, people started seeing, like people started complaining, no, this is not only company, the people who are controlling this company after his case. That's why it is the landmark case. Are you getting? Yes. So, yes. So in this paragraph, what you had seen, guys, for the genuine and lawful purpose, you can take the shelter of separate legal entity, but not for the wrongful act, not for the fraud. If it will be there for the improper use, then what will happen? Court will ignore that separate legal entity feature, and court will look who are beyond this, who are controlling this company's affair. Clear? Hai? Yes. Then under this principle, we had covered this. So now you will see some cases where court had lifted and pierced the corporate veil, and they had checked that who are behind this shield. Okay, so what are that cases we are going to cover further? Okay, so BSN UK Limited versus Janardhan Mohandas Rajan Pillai. The court observed that the corporate veil may be lifted where corporate personality is used for what, guys? Conceal wrongdoing. Conceal is what? Hiding. Hiding the wrongdoing. So there was a wrongdoing. So they were hiding that. So in that case, what happened in this case? The court had lifted the corporate veil. Cases where corporate veil is lifted, courts may lift the corporate veil in the following situation. The first one is the fraud or improper conduct. So where the company form is used to commit fraud or improper conduct, courts will disregard the separate legal entity. Yes, already we had seen. So what case is there? These things you have to remember, beta. They will ask on this topic. Guilford Motor Company versus Horn. Which year? 1933. Smith versus Anderson, year 1880. 80 or 88? 1880. Yes. Okay. So Guilford Motor Company versus Horn in the case of fraud and improper conduct. Okay. So a former employee agreed. What was the case, guys? A former employee agreed not to solicit. See, one person was working in a company. Say suppose Mr. Abhijit. Abhijit was working in a company, and he said now he became the former employee. He left that company and he said that I am not going to solicit. What is solicitation, guys? What is solicit? Advocacy. Advocacy. So Abhijit was the former employee of this company, and he had made a contract, guys. He had made a contract with the company that when I will leave this company, I will not solicit this company's employee. I'm not going to file any kind of case, or I'm not going to start any kind of court proceeding against these company's employee. Okay. So this company is the employer of Abhijit. So here it is given that a former employee, who is the employee? Abhijit, agreed not to solicit customers, sorry, not employee, customers of his employer. Employer is that company. Are you getting? Abhijit was the employee of that company. So that company is the employer of Abhijit. So Abhijit had made a contract that after leaving this company, I am not going to start any kind of court proceeding against the customer of this company after leaving service. So to avoid this restriction, what Abhijit had done, guys, he formed a company through which he continued solicitation. Are you getting this? He said he made a contract with this company. This company was the employer of Abhijit. He said, I am not going to solicit your customer. Okay, your customer. Okay. So what he had done? Now he had some issues coming here. Okay. So he had made this contract with this company, and he said, I'm not going to solicit. But what he had done, the contract was there, no? To avoid this contractual obligation, what he had done, he started a new company, guys. New company where he was doing the work of solicitor, and he started with this company, he started solicitation to customer of this employer. Are you getting? He started a new company. Okay, new company, just to do the solicitation of that employer's customer. Okay, so this is why he started, for the improper conduct, for the fraud only. So this is the case. Guilford Motor Company versus Horn, 1933. Okay, so this case, did you get the? Yes. So the court lifted the corporate veil and restrained the company because it was formed merely just because evade contractual obligations. He is fine in his contract, whatever contract he has made. He's telling, I am not doing any kind of solicitation to your customer. But what he had done, he started a new company to do the solicitation, that is indirectly. So this reason, to evade contractual obligation, he had done the improper use. Did you get this? Yeah, yes. Any name, the fraud name. There the people used to start many bogus company. At one registered place, one registered office place, there are many companies. Many companies people start to do the fraud. Okay. Yes. So this was about the Guilford Motor Company versus Horn. Next is company acting as an agent or trustee. What features we had seen? Company is not the agent and trustee of the members, and members are not the agent and trustee of the company. Now, where a company acts merely as an agent, trustee or nominee of another person or company, courts may lift the veil. This RG Films Limited 1953, an American company, financed production of a film in India through a British company which acted merely as its nominee, guys. Okay, let's first hear this whole case. So the Board of Trade refused to treat the film as a British film because the British company was only a facet for the American corporation. What is the meaning of facet? Mask. Yes, facet is the mask. Okay, mukhota. So guys, what happened here? This American company, they wanted to make a picture in India. They wanted to produce a movie in India. But what they had shown, they had not shown that it is the American production. What they had shown? British company, through the British company. And this British company was just a nominee of that company. Why? Now the question should come here. Why? So this, if it is a British production, guys, they get too much of tax relief. Tax relief. Okay. Even up to 80% also. And that is the reason they had not shown the American production. What they had shown? British production. And like that, to save the tax, they had taken the help of British company. And that company was treated as just a nominee company. Okay. So what they had done, the Board of Trade refused to treat the film as a British film because the British company was only a mask for the American corporation. Clear? Yes. So this RG film, you have to remember these case laws, guys. RG Films Limited 1953, Guilford Motor versus Horn 1933. Yes. Next is what? Production of public policy. So in these all cases, the court will lift and pierce the corporate veil. Okay. Next is what? Protection of public policy. So if any company is doing any conduct which is ruining or which is against the public policy, court will interfere in that matter and court will see who are controlling this company. Okay. So courts may lift the corporate veil where corporate personality conflicts with the public policy. Corporate personality is conflict with means they are against with the public policy. So Connors Bros versus Connors 1940. During wartime, the court examined whether a company was effectively controlled by enemy nationals. So this case happened. So during wartime, who was controlling? The enemy country was having the control on this company. It means what? The company was treated as which company? Enemy company, because persons controlling it were residents of Germany, which was at war of England. Okay, so this company will be treated, it is controlled by the enemy country, and then the public policy required lifting the veil. Clear hai? The third case law, Connors Bros versus Connors 1940. Then determining similar to that ever point, determining the true character of the company. How you will determine the character of a company? That company is your friend or foe? Company is your friend or foe? Company is your friend or your enemy? How you will determine when the control is by the enemy country people. Are you getting? Yes. So courts may ignore the company's place of incorporation wherever it is incorporated and examine who actually controls the. This is what, if I'm talking about again and again, I'm giving emphasis on control word. What is that, guys? Huh? What is that? What is that? That is called the what? Concept. That is the key word. And concept you have to understand. In the whole paragraph you have to understand what? That who are controlling, then what is the main thing court is looking? What is the main thing court is looking? Who are controlling? So if they are controlling and they are from the enemy country, then court will interfere. That's why again and again this word is coming, and I am telling you why. You have to understand the concept, that in this case what we have to check. If you are conceptually clear, you will directly focus on the control. Who is controlling? Are you getting? Yes. So the crux of this what? The who are having the control of this company. So Dalmar Company Limited versus Continental Tire versus Tire and Rubber Company Limited, 1916. The court looked beyond the corporate structure to determine whether the company was an enemy company during war. The real character and control of the company were considered rather than its place of registration. Rather than its place of registration, we have to check who are the controlling people, and if they are from the enemy country, the court will interfere and they will lift the corporate veil. Clear? Yes. Next is what? Evasion of taxes and duties. If any entity is there to evade the taxes, okay, and duties. What are the duties? Duties means what? Had you heard about custom duty? Yes. Import duty. Yes. So these are also the taxes. Okay. Taxes. Yes. So evasion, if any entity formed to avoid the taxes, okay, if they wanted to avoid the taxes, in that case court will interfere. Okay. So where a company is formed to evade taxes or conceal is what? Hiding the real transaction. To avoid the tax, what they are doing? They are hiding the real transaction. Okay. So if any company is formed to avoid the taxes or hiding the real transaction, court may pierce the corporate veil. Okay. And Commissioner of Income Tax versus Meenakshi Mills Limited, the court upheld lifting of corporate veil to examine the real nature of the transactions intended to evade taxes. Yes. To remember these case laws, the year, these all things, and what was the crux, at least in one line you have to write these things. If you will write once, no, you will remember. Even if one party you will remember the case law. Are you getting? So without writing, it is little bit difficult to remember. Are you getting? Yes. The 5-6 cases are there. What was the crux? Control was there, or the war situation, enemy country, or taxes. Otherwise, it will mix. So taxes wala case law you will write in the enemy country. So at least once, twice you should write this case law name. Okay. Then what, guys? Company formed solely to avoid the tax, where the sole purpose of the incorporation is tax avoidance. Courts may disregard the company's separate identity. Sir Dinshaw Manekji Petit case, 1927. So what happened here, guys? Just to avoid taxes, 2 cases are here. Okay. One, Commissioner of Income Tax versus Meenakshi Mills Limited. Second one is what? Sir Dinshaw Manekji Petit case, important case, it is 1927. Okay. Here, the SSC formed private company to divide his income and reduce tax liability. The companies merely acted as conduits and returned money to him as a loans. The court held that companies were created solely to avoid taxes and ignore the separate legal entity. This Manekji Petit, what this sir had done, he was getting some dividend and interest from one company. Okay, guys, interest from one company. And what he had done, now he got the dividend and interest, he have to pay what, guys? He have to pay tax. Okay, so he was getting dividend and interest, so he have to pay the tax. To avoid this tax, what he had done, he had transferred this whole income to one new company. In new company. Are you getting? He transferred in this new company, and what he had taken? There are provision to take loan from that company. So he had taken all the money, all the income and interest as a loan again to him. Are you getting? He had transferred all income and interest and he had taken the loan. Okay, so he is having the money, but what he is avoiding here? He is avoiding the payment of taxes. On loan, you will pay tax. No, on loan you will not pay the tax. So tax, loan to director and all in the CS executive, these things you are going to see. So there are provision where this director can take the, or shareholder can take the loan, okay, being a director and all. So loan to directors and all. So what he had done to avoid this tax, that he is not, he doesn't want to show this income, he had transferred this in the new company, and after transferring he had taken the loan to avoid the tax. Got it? So that's why the court will interfere in this, and they will check why this company, why he had started the new entity, for what? For any genuine purpose or for the avoidance of taxes. Okay? Yes. The next is avoidance of welfare legislation, guys. Welfare legislation. So in this case, actually, this company was supposed to pay bonus to the workers. Okay. Now what happened? This company was showing the profit, but at the time of payment of bonus, what they had done? They had transferred their surpluses or their profits to the other company. And then they are showing we are not having the profit from where we will pay the bonus. Are you getting? This company was showing the profit till the time they are, usually at what time they used to pay bonus, and there is a decided time, or usually at the time of Deepavali and all. So at that time, what the profit was shown, but at that time they were transferring this whole profit and surpluses. To avoid this bonus payment, they are putting it into the other company. Okay, this is also for the improper use or not? Yes. So courts may lift the veil where companies are formed to defeat labor welfare laws or statutory obligation. If you are under Bonus Act, okay, you have to, if you had done the registration, you have to pay the bonus. Okay, you have to pay the bonus. So what they are showing, we don't have money, from where we will pay the bonus? We are not having profits, how we will pay the bonus? Okay, so Associated Rubber Industry case 1986, a company formed another entity. What he had formed? They had formed another entity mainly to reduce bonus payable to the worker. Okay, so the Supreme Court lifted the corporate veil and examined the real transactions to protect workers' right in this case. Okay, so which kind of, this company wanted to avoid the welfare legislation to defeat labor welfare laws and statutory mandatory obligations by statutory obligation by the statute, by the law. It is these are the obligation company have to comply or followed. But to hide their profit, they had started a new entity. They transferred their surpluses in the new entity, and at the time of payment of bonus, they are showing that we are not having the profit and surplus from where we will pay the bonus. Are you getting the intention? Are you getting the intention? Yes. So in this case, to safeguard the welfare of the workers' right, what they had done, court had interfered and lifted the veil. So these are some cases where you have to remember. You have to remember the case laws also. You have to remember the intention also, that what was the reason behind they had done this improper and unlawful act, these companies or any person. And you have to remember this case law's name also and year also. Are you getting? Yes. USD? Yes. Okay, USD. Yes. Okay. So this is a little bit interesting and something. अभी तक तो आपने क्या किया? The thing, whatever you had seen, the features and all, the advantage and disadvantage, it was a very easy topic. Okay, this is something you have to give little bit pressure on your mind, and you have to remember these cases. Okay, so let's revise this: fraud or improper conduct. Guilford Motor Company versus Horn, okay, in improper conduct. Company acting as an agent, RG Film Limited, okay, American company, production. They had taken help of the British company, yes. And then the third one is protection of public policies. So Connors Bros versus Connors 1940. During wartime, you have to check who are controlling. If it is controlling by the enemy country, then court will interfere. The little bit similar kind of in the case of Daimler Company Limited versus Continental Tire and Rubber Company Limited. That there also you will see at the time of war who are controlling. If enemy country is controlling, then court will interfere. Then evasion of taxes, two cases we had seen: Commissioner of Income Tax versus Meenakshi Mills Limited, and company formed solely to avoid taxes, Sir Dinshaw Manekji Petit case 1927. And the last one is for what? Avoidance of welfare legislation, where the company was supposed to pay the bonus, but at the time of bonus, they had started a new entity and transferred all the surpluses to avoid the taxes. So then court had interfered to protect the workers' right. Okay? Yes? Yes. Then we will see this one, the types of companies. Okay? Types of company. Then your one part will complete in this chapter. Then this board of director, boards, this quorum, these all things that we will see. Okay. So after today's lecture, we are going to meet on Monday. So you have to revise. The Monday we will have a quiz. You will get some prize also. Okay. So the online student also, if you wanted to participate in the quiz, please watch these lectures and revise it. Even you can drop your address and we will send gift to them also. Yes? Yes? Okay, are you excited about it? No, we have to study, ma'am. Yes, are you excited about it? Yes? Okay. See, if you are not excited about the gift, guys, you should excited about your exam. Ultimately, I am not going to write your exam. You are going to write your exam, where you have to crack your exam by the October only. Yes? Yes? Time already started. Yes? Okay? Shall we go further? You need a break for your mind? No? Yes? Yes? No? Yes? Okay, very good. Smart champs. Okay, so types of companies, guys. Companies may be classified on the basis of, now, Harshita, you are asking about how to remember the sections. Yes? So, how to remember the sections, give the concentration, right ones, and then you will remember. We'll make a summary. We'll make a summary that what we had covered. If on the daily basis you will do these things on the daily basis, whatever you had done then and there, you have to, like, on the same day or by the next day, if you are making it, it is not at all difficult. Nothing is difficult, guys. Okay? Yes? So types of company we are going to see. Companies may be classified on the basis of liability. You are already know that what is limited liability, unlimited liability. Okay? Number of members, then ownership and control, and purpose or functions. Okay? So company limited by shares. A company limited by share is a registered company in which liability of members is limited to the unpaid amount on their share held by them. Okay. Thus, members are liable only up to the nominal value of the share held by them. What is mentioned in the MOA, the nominal value, that much of value you have to pay. You are liable to that much only, guys. Okay. If the share price is, example, 100 rupees, you had paid 50 rupees, you are liable for how much rupees? On one share, another 50 rupees. Okay. Yes. Then if shares are fully paid up, no further liability. If once you are paying all the nominal value, then you are not liable for further value. So this is the most common form of the company. Example, if a shareholder holds share worth rupees 10,000 and has already paid the full amount, he cannot be asked to contribute any amount further. Okay. A company limited by guarantee, what we had discussed, limited by guarantee, if they had given a guarantee for any prescribed amount at the time of winding up, company can ask you that guaranteed amount. When the company is the going concern, at that time company will not ask you to pay that guaranteed amount. Are you getting this? Guarantee. What is the difference in guarantee and limited by your limited your liability limited to the guarantee and limited by shares? Yes, what is the difference? What is the difference? What is the difference? Okay. Yes, Hemant. Okay. Yes. Yes. Everybody is getting this. Yes, Hemant. No, you didn't get it. Hmm? What is the difference? If you are a member of the company limited by share, okay, so how much share you had taken, that much of share unpaid amount you have to pay. If you had paid initially only full amount, so then you have no liability. Okay, you can be the member of that company. Okay, and if you are a member of the limited company limited by guarantee, so you had guaranteed, say suppose 2 lakh rupees. So company cannot ask you when company is a going concern, the company is operating well, that time they will not ask. At what time they will ask? At the time of winding up. At the time of winding up. This is a slight difference in that. Okay. Yes. So company limited by guarantee, the company limited by guarantee is a company where members undertake to contribute a fixed amount towards company assets in the event of winding up. Yes. The liability of member arises only at the time of liquidation. It doesn't arise while the company is going concern. Such companies are generally formed for this guarantee company actually. Generally, it forms for the non-profit purposes, clubs, trade associations, charitable institution, and society. You have to remember these three things in that. Okay. These companies are formed for what reason, guys? Non-profit purposes, club, charity, okay, for trade associations, charitable institutions, and for the society. Clear? Yes. Example, if a member guaranteed 5,000, his liability cannot exceed that amount during the winding up. How much you have to pay? Only that much. How much you had guaranteed, because this is liability. This liability is which liability? Limited liability. Limited liability. Then unlimited liability. And unlimited liability is a company when there is no limit on the liability of members. In case of winding up, members may be required to contribute from their personal asset to meet company's liability. If you are a member, if your liability is unlimited at the time of winding up, how much a company is liable to pay to the creditors or whatever liability will be there, what will happen? You have to even bring from your personal assets also. Clear? However, creditors, this is important. Creditors cannot directly, now you are the member of that company, okay? The creditors who had given credit to that company, you are a member and the company is different, okay? But in unlimited liability, you are liable for company's liability. Can creditor directly file a case against member? No, they cannot file. Though your liability is unlimited, that doesn't mean that they will file a case against member. So creditors cannot directly sue members. Contributions can be demanded only by the liquidator. At the time I told you, the liquidator will be appointed to do all the settlement of the assets and all. So during winding up, who will demand, guys? No creditors. Creditors cannot demand you directly. Who will demand? Liquidator. Who will do the liquidation process. That liquidator can demand from the members that you have to contribute this much of money because we have to pay the liability of the company. Is this clear? Any doubt in this? Clear? Yes. So an unlimited company may later convert itself into a limited company subject to legal condition. So unlimited company can convert into the limited company. Clear? Limited by shares, limited by guarantee, and unlimited liability. Okay? Yes. Next is what? Private company. Section 2, subsection 68. Section 2, subsection 68. A private company. Three features you have to remember, guys. According to the Companies Act 2013, a private company is a company which restricts transfer of shares. We had already seen this feature. Company private company cannot transfer. There is a restriction, reasonable restriction. Absolute restriction is valid. Yesterday we had talked about it. For private company also, absolute restriction is valid or void? It is void, invalid. Complete restriction is invalid. They can transfer to their friends and family. So restriction, reasonable restrictions are there. Okay. So restriction to transfer of shares and limit the number of members to maximum how much, guys? 200. Then prohibits invitation to public for subscription of security. They cannot, private company cannot go for the inviting subscription from public in the form of IPOs. In any company, when they go for the subscription from the public, they go for the IPOs, right? So this company, private company, if a private company wanted to bring IPO, what they have to do? First, they have to change into the public company. Then they can ask subscription from the public. If it is a private company, they cannot ask subscription from the public. So this is the third one. Prohibits invitation to public for subscription of securities. Okay. So restriction of transfer of share, limits the number of member maximum 200, and prohibits invitation to public for subscription of security. A private company generally enjoy greater control, privacy in management, and fewer legal compliances than public company. So their compliances, the formality, legal formalities are little bit less than the public company. Clear? Next is public company, section 2, subsection 71. Okay. Section 2, subsection 71. A public company is a company which is not a private company. What a simple, not silly. What a simple definition. Okay. A public company is a beautiful definition, madam. We will never forget this definition. Public company is a which company? Which is not a private company and has a minimum paid up share capital as prescribed. Earlier there was the right now the capital criteria is not there. Earlier it was the minimum criteria was there. Now there is no criteria. As per the prescribed by your MOA and AOA. Okay. So a public company can invite public to subscribe to share, raise capital from public, and list security on the stock exchanges. This particular work we used to do. Yes. For a public company, if public company wanted to raise funds, what we do? Any company secretary can do. That is my core area. So what we do for a public company, we give the prospectus. Through prospectus, we invite subscription from the public, and if a company wanted to raise capital, so then public will invest in that company. And for that, what you have to do, how the public will invest, that you have to list the shares at the stock exchanges. Okay. Bombay Stock Exchange or National Stock Exchange, and their public can buy, even they can subscribe. After that, buying and selling is easy for anyone. Okay. Yes. Further, a subsidiary of a public, star mark this point, a subsidiary of a public company is also treated as public company, though it is a private company. If the subsidiary, holding and subsidiary is the next definition we are going to see. So the subsidiary of a public company will be treated as a public company, though it will be a form of a private company. Then also it will be treated as public company. This phrase you have to remember. Okay. So any subsidiary of a public company will be treated as public company, though it is a private company. Okay. So then next is, in the Companies Act 2013, this concept came, OPC, one person company. Okay. Yes. Section 2, subsection 62. A one person company means a company having only one person as its member. OPC, how many members there in OPC? One member. OPC combines benefit of sole proprietorship and advantage of corporate structure. One person, one member can run company just like a proprietorship, but they can take the benefit of the corporate structure also. Okay. It provides separate legal entity. Member is separate and company is separate, though there is a one member only. Then limited liability and perpetual succession. to a single entrepreneur. Clear hai? OPC is what? One member, still it is separate or not? Separate or not? It is separate because it is a legal entity, okay? And it is having the benefit of the proprietor. The one member can enjoy like a proprietorship, and but having the benefit of the legal entity, okay? Then companies with charitable object, section 8 company. Section 8 company. Companies with the charitable object. Under section 8 of the Companies Act 2013, companies may be formed for promoting commerce, art, science, education, sports, research, social welfare, religion, charity, environmental protection, etc. Okay. So section 8 companies for what purpose, guys? For these purposes. Okay. Condition, profit. This is also important. Now, if it is for the environment protection, research, social welfare, can this company is for the purpose of making profit? And can the members can take the shareholders can take the profit? No. So profit must be applied for promoting object of the company. What is the object of the company, guys? Promotion, research, sports. That is the object. What is the purpose of making section 8? For these purposes, commerce, art, promotion of any kind of social welfare, religion, charity, environmental protection. So if this company is making profit, it will be utilized for what? For the promotion of the object of the company, for the purpose of the company, and it is and the dividend can be distributed to. Profit must be applied for promoting object of the company. Dividend cannot be distributed to members. In the normal company, they have a right to take the dividend, but in the section 8 company, it will not be distributed to the members. Okay. Such companies may be registered without using name limited or private limited in their name. Okay. Excuse, how many types of companies are there? Yes, this much. We are coming to the end of this part. Small company. See, guys, small company, there are some amendment in the paid up share capital and turnover. So a small company means a company other than a public company, having paid up share capital. How much? Earlier it was 4 crores. Now it is less than or equal to 10 crore. Paid up share capital of the small company is less than and equal to how much? 10 crore. Earlier it was 4 crore. And the turnover, guys, less than and equal to 100 crore. Earlier it was 40 crore. Okay? Okay. Paid up share capital, how much? How much? Less than and equal to 10 crore or up to the 10 crore. Okay. And earlier it was 4 crore. Now the turnover is how much? Less than and equal to 100 crore, and earlier it was 40 crore. Yes. So section 2, subsection 85. Small company, a company which is a company other than a public company. Okay. However, the following cannot be treated as small company. Which companies will not be treated as small company? Holding company, subsidiary company, section 8 company, and companies governed by the special act. These company will not be treated as small company. Small companies enjoys lesser compliance burden. What is compliance burden? Yes, Namrata, what is compliance burden? Compliances are what? Legal formality imposed by whom? Imposed by? Legal formalities imposed by regulators. Regulators, guys. Regulators. Who are the regulators? RFC, MCA, okay. Stock exchanges, if it is a listed company, SEBI, RBI, if it is a foreign company, okay. Yes, so they are the regulators. So in small company, compliances are lesser, and simplified procedures are not that critical, and regulatory benefits for small company. Okay. Yes, which company will not covered under the small company, that also you have to remember. Yes. The next company is the government company, section 2, subsection 45. Okay. Government company is what? Section 2, subsection 45. Small company, section 2, subsection 85. Okay. Private company, section 2, subsection 86 nahi, 68. 68. Public company, section 2, subsection 71. So private company, section 2, subsection 68. Public company, 2, subsection 71. Then small company, section 2, subsection 85. And the government company, section 2, subsection 45. Is it difficult, Harshita? Not at all. Yes, government company. So a government company is a company in which not less than 51% of the paid up share capital is held by either central government completely or central government or state government. So either central government completely or jointly with the state government. How much? 51%, not less than. Okay, not less than 51%. Then that company will become the government company as per the section 2, subsection 45. Are you getting how much paid up share capital should be held by the government? And which kind of government? Any government. Central government can keep more than not less than 51%, more than 51%, or central government and state government together jointly, they can have 51% in any company. Then that company will be treated as the government. Yes, USD? Yes. Okay. Yes, so it includes subsidiaries of the government company. Government company include subsidiaries also in the government company definitions. Like Bharat Heavy Electrical Limited, BHEL, Oil and Natural Gas Corporation, ONGC. These are the government company examples. Okay, done. Section 2, subsection 45. Yes. Yes. Next is what? Foreign company, guys. Foreign company means what? Incorporation will be held in foreign or India. Okay. So a foreign company means a company incorporated outside India, but which has a place of business in India. It is incorporated outside India, but it has a place of business in India and conducts business activities in India. Okay, that's why it is coming under Companies Act 2013. Yes, so business may be carried on directly or through agents or through electronic mode. Right, it is incorporated outside India and they are managing through electronic mode also. So there will be one system or any place of business, any agent who are reply on behalf. Why the place of business in India? Because it is coming under Companies Act, means this company's all legal formalities somebody will do or not. Yes, so that agent or through electronic mode, or it is like it is having a place of business in India, any setup in India. Okay, yes. Then holding company, it is called the parent company also, parent company. A holding company is a company, section 2, subsection 46, a holding company is a company which controls one or more subsidiary companies. Control may be exercised through control over board of director or control over voting power. Okay, so say suppose ABC Limited is having, ABC Limited is a holding company, okay. And holding company of which company? Subsidiary company. Okay, so this holding company or parent company also we used to say it. Okay, parent company. So this company is having control on the management, means all the decision will be taken by the holding company. All the decision will be, the majority of decision will be, not all, even if it is all, if I am telling you all decision will be taken by the holding company, then it is called wholly owned, guys. Wholly owned means 100% control. Then it is called wholly owned subsidiary. If any company is having control 100% on the other company, so this company is called wholly, this subsidiary is called the wholly owned subsidiary. Means this holding company is having all the control on the subsidiary company. Now you had not seen the subsidiary, no? So you may be little bit confused. Okay, yes. I'll just read holding and subsidiary together. Okay. So you had seen holding company, if it is having the more than 50% control over the board of director, means management, and control over what, guys? Voting power for the decision of the companies. Okay. Now subsidiary company is what? Section 2 subsection 87. A subsidiary company is a company in which holding company control composition of board of director or control more than one half, means more than 50% of the voting power. Thus the holding company exercises dominant control over the subsidiary. Now are you getting, we are talking about which companies? Holding company and subsidiary company. So you are learning together here in this chart. If this ABC Limited is having the control on PQR Limited, so this ABC Limited is holding more than 50% control on the board of directors, on the management, or control, or how much more than 50% voting power in this subsidiary company, then it will be called the holding company. So how much is the minimum criteria? 50%. Okay. If this company is holding 100% in the subsidiary, so this subsidiary will called wholly owned subsidiary. Wholly owned subsidiary. Okay. Yes. See this? Are you getting this? Let me know. Yes, USD. Yes, Praveen. Okay, are you getting, guys? See this? Read it together, holding and subsidiary. Important concept they used to ask in your exam. Section 2 subsection 46 for holding and section 2 subsection 86 for subsidiary company. And the subsidiary of a public company, though it is a private company, will be treated as a public company. Any doubt? Any doubt? Any doubt? Holding subsidiary, समझ में आया? You can understand it together only. Okay, any doubt in this? No? Yes? Then the last one, the last topic of today is producer company, section 378. Okay. So a producer company is a body corporate formed for the activities related to primary produce and mutual assistance among producers. So main object of the producer company is what, guys? Production and marketing of primary produce, processing and packaging of produce, supply of machinery and equipment, and technical and consultancy services, insurance of the producers, welfare measure for the members, means the members there are welfare, they are taking care of welfare of members or not, and financing and credit facilities for the members. Now who will cover under? First you just see, then you will understand. Producer companies are mainly formed for the farmers who are producing the primary product, agriculturists, rural producers, and cooperative activities. So this company is formed for farmers, agriculturists, rural producers, and cooperative activities. And what is the main object of producer company? Production, marketing, processing, packaging of produce, supply of machinery, equipment, technical consultancy services. If they need any technical services, these producers need technical services. These all things are covering under that purpose of this company, object of this company. Insurance of producers, welfare measures for members, and financing and credit facilities for member. And this company is covered under section 378. Did you get this? The object, the main object of producer company. Okay. It is for the activities related to primary produce. Okay. So producer company. Fine. So what is your work now? This further this, the other section is starting, board of directors. Okay. These things we are going to study. Before that, these basic things should be in your mind. Yes. Yes. Online student also, you have to revise this. Go and watch this lecture. Whatever you are understanding, if you have any doubt, you can drop the messages. And You have to revise this whole thing. Monday, we are going to discuss question on this segment, whatever we had covered. Yes, from the meaning of the companies to types of the companies, lifting of corporate veil, features of the company, what are the advantage of that feature and disadvantage of the company form. Okay, these all things we are going to discuss on. So be prepared completely. Yes, you will do that. Yes, we all will meet on Monday. Yes, Saturday and Sunday, you guys enjoy and watch the lecture, revise your lectures. Take care of yourself, guys. Thank you so much for the patience listening.